Hey traders, happy Sunday. Welcome to the top tier outlook for the week of February 12th. We are getting a jump on the week. We're getting a jump start on a lot of things. So yeah, I think a lot of folks are probably enjoying football watch parties and whatnot. I'm going to tell you what I'm going to be doing tonight? I'm going to be looking at the charts. So you might say, Rod, you're not watching football? I won't be watching football. I'll catch the winner tomorrow morning on Twitter, no doubt, and I'll catch all the commercials on YouTube, one after the other, easy peasy. I'm going to be working on charts, and you know why? Right now, January, February have been en fuego. So my thought is, while everyone else is watching football, I'm going to get a jump on the week, and we're going to continue to slay in the Sector Secrets Mastery Room, and it's particularly important right now because for those of you that may not already know, let's see here. And I'm trying to find my little link. Here we go. We've got a trial coming up, right? So you can just sign up for the trial if you'd like, but how about check out the webinar we have coming up on Thursday, this Thursday, 8 o'clock. And what we're going to be doing, and you can register at simplertrading.com/becoming consistent. And that's exactly what we're going to talk about. So think about this as really the primer for what you'll be doing when you get into the mastery on the trial. But yeah, definitely do check this out. I'm telling you right now, it's a trial. That's it. That's it. So there's nothing else that we're going to be talking about other than how have we been doing through January. Think about your 2024 results. Are they exactly where you want them to be? Do you think you're leaving a little bit of something on the table? Maybe you're looking in the wrong place. You're looking at meme stocks continuing to make higher highs. You don't know when to jump in. I'll give you a meme stock right here, jumping to higher highs. GE. Is GE a meme stock? It might as well be. Look at that trend. Very tradable trend. Those circles are the last two entries, right? Now, I'm not saying that some of these straight up stocks aren't fun and that looking at the the SMCIs of the world aren't great. But let me tell you something. That's a $740 stock. And yeah, it's had a great run. That's awesome. Do you think you build a career on these stocks? Or are these just fun things that happen from time to time? It's the cherry on top. It's maybe gravy. What is the meat and potatoes? It's boring stuff like GE that's affordable, scalable, and just continuing to climb on higher. These are the differences. And I'm pointing these out because I don't want anyone to waste their time, right? If you're thinking, Rog, I love meme stocks, don't come to the webinar. I'm telling you right now, I mean that sincerely. Enjoy your meme stocks, enjoy the buying at higher highs. But if you're thinking, Rog, there's got to be a better way. I didn't have 20 trades last month. We did in the mastery, right? We're already, hey, bot, how many trades I was just slacking with the bot before we started the show. How many trades are we in already in February? We're only 11 calendar days in, even fewer trading days. I think we have something along the lines of 6 trades already. Something around, if I recall, around that. So this is what I'm talking about, right? And again, those of you that are here before the Super Bowl, I will be shutting up before kickoff. But think about which direction you're pointed in, and think about what you trade is more important than how you trade it. And ask yourself, can I find opportunities in the American Expresses and the GEs of the world for the remainder of my career? Or am I going to be reliant on the SMCIs and parabolic moves for account building? And that latter is a scary place to be. It's a dangerous place to be, right? We want a nice, boring place to be. So come check out what we're doing on Thursday. I am very excited to show you how boringly awesome the last month and a half has been. All right. So yeah, bots confirming 6. All right. Awesome. So let's get to it as always. If you have any questions, I know we're going to have a thin crew here, but again, shout out to those of you that are making it here to to Top Tier Outlook Live. We'll be live tomorrow with Charts and Coffee as well, of course, in the replay. If you have any questions, feel free to type them in. I do check back at the YouTube replay, both at my channel at Raghee Horner and also the Simpler Trading YouTube channel. And shout out to my Twitter followers as well. All right, so let's get to it. What do we have here? Well, again, there's a link on the screen if you want to check out Thursday. You really should. Whether you want the trial or not, whether you're a member or not, there's going to be some aha moments. There always are. And it's those little aha moments that build into the kind of career that I know that I've enjoyed, and I want y'all to be able to enjoy as well. All right. So next up is, hey there, Captain Jane. As we're hitting higher highs on the indices, yes. All right. Okay, let's jump on over to, say, the ES. What daily level pullback am I waiting for? 21? No, I don't use a 21 all that often. I know it's popular, but let's remember something, gang. A mean reversion. What is the mean? There's no accepted mean. It's just what different traders prefer. Some traders like a 13, some traders like a 21. I like a 34. There's no accepted mean. Some traders want to use Fibonacci levels from last major moves. Right now, I can say this because I've looked at the 21, right? In fact, here, let's do this. I'm going to show you because we have a little bit of time, and I'm sure we're not going to have a ton of questions, which is fine. So let's turn on the 21. I'll turn on the 34, and let's see what that looks like on our chart. All right, those are the dots, by the way. So the green is the 21. How often has that been hit? Not all that much, has it? How about the 34? Hasn't been hit either. How about my 34 EMA wave, the green, yellow, and red? Nope. And that's actually not the wave anymore. It's our pro tier, but same idea, right? How about the moving averages of a retracement? What I consider a mean reversion hasn't been hit either. You know what's outperforming everything? The daily price movement range. That's the gray zone. Garanimals, ready? Green and gray equal buy. Heck, gray and gray equal buy. So let's paint by numbers. Would that be more paint by numbers or garanimals? Y'all tell me. But that's the sequence. That's the formula. That's the repetition we're looking for. Daily price movement ranges, even in the context of trends, are absolutely outperforming the 21 and the 34. All right, next up, Sean B asks, do I think there will be a sudden correction in the market? Sean, it's a fair question that, and I'm going to tell you right now, no one can answer. So let's say it happens in 6 days, 6 weeks, 6 months, 6 years. Do you think anyone actually knows that? Not a soul. However, trading analysis and folks on television, it's an interesting reality. You have some grown adults who will, with conviction, confidence, and dare I even say arrogance, will answer that question with a precision that can only mean they can see the future. The honest answer, and I do mean honest because the rest of them are lies, is nobody knows. Nobody knows. Will there be one? Sure. Do we see them coming? We do not, right? So do I think there will be? Sometime. When? Not a clue, right? So what I'll tell you is this. Right now, and I've been hearing this for a while, what have we been hearing as the S&P? And I'm giving it to you straight here, gang. I'll tell you that in the Sector Secrets Mastery, we've been bullish for 14 months. When 2024 started, I pretty much pleaded with our members, if not said downright, I'm going to give detentions out if anybody starts getting bearish as we start the year. We have been buyers. The trades that I'm going to show you on Thursday are really long calls. Very simple. Cash account, long calls, buy the dip. It's outperforming just about everything as long as we know where the zone on the chart is. We want to buy the option, right? So the bottom line is this. There's going to be a lot of folks out there who are going to tell you about warning signs. And there's going to be folks out there telling you about some market internal like breath that's signaling something. In the meanwhile, we're at all-time highs. So how much are those folks warning you about the shoe that's going to drop, keeping you from making money? It happened to folks all last year, right? Oh my gosh, the inverted yield curve. Oh my gosh, Jerome Powell and company don't know what they're doing. And you know how many folks sat around waiting for the crash because someone needed a click, right? That's how insidious it is. And I mean that it's insidious, right? So will there be one? Am I worried about some minor, I don't know, divergence on some secret squiggle as we're making higher highs? No, you know who I want to hear from? And this is what I look for. Folks who are looking at trends, finding trends that are moving higher and buying the dip. At some point, there will be a correction. But you know what's great about that? If we've been buying the dip for 14 months now, when we do get a correction, do you think we've got a little bit of unrealized profit already sitting in the account? And it's not going to hit our capital, right? We've been building the account as this has been happening. That's how you absorb the absolutely unknown, unforeseeable, unpredictable, and absolutely inevitable pullbacks, right? So please don't let someone fear mongering you for clicks, right? For attention, keep you from buying the dip. It is working. Now, the longer you wait, and if you buy at higher highs, it is going to be vulnerable, right? You are going to be at a point in time where, maybe we are overextended, or maybe what's overextended, by the way? It simply means that as we look at a higher high, traders and investors say, I don't want to buy at that new high. I want things to come down a little bit before I buy, right? And so please, gang, keep that in mind. This is a bullish environment. It has been so far since the beginning of the year. And anything that diverts from that is simply a very, very simple way of looking at it. This is the way I look at it. When people tell me about warning signs and why the markets are going to crash, oh, they're not already long. So of course they have to say that, right? So I might be sounding a little tough. I hope so, because that advice has positively cost a lot of traders a lot of opportunity, and I'm rooting for the retail trader. So when there's terrible analysis out there parading around as fortune telling, I'm going to get pretty salty about it. So thank you for the question, Sean. I appreciate it. When you hear all the knuckleheads out there warning you of things that are going to happen, how about telling me how you got long? And now maybe giving me a warning sign. Isn't that funny? They'll seldom tell you where and how they got long. They're just going to warn you at higher highs. So yeah, heck with that. Yes, there's eventually going to be one. No clue when that's going to happen or even why, right? Okay. Next up is that the volume weighted average price that I have for the bands on the chart? Spartan, no, they are not. They are not a VWAP. I love VWAPs, and I like an anchored VWAP, like an A VWAP. But no, those are not volume weighted average prices. DPMR has been slaying. It is. Yeah, it is. And it's not because it's magic, and it's not simply because it's my indicator, although it is. It's because it looks at volatility, which is something most traders don't know that they can measure and use as support and resistance. So what a fantastic edge. Santu asks, how do you get into a trade in a gap up after earnings like net? Sandu, my answer is not going to be helpful, but it's the only one that's actually useful. It's not going to be helpful now, but it's going to help you going forward. The gap up is not what should get your attention. If you're waiting for stocks to gap up to buy them, the party's already happened. Maybe it'll be for a little bit longer, right? The trick is to have a set number of symbols. It could be 10, 20, 120. But the trick is to have, it's not even a trick. The key is to have a set number of symbols that you are watching fairly consistently. Now, maybe net ends up on the radar because you're watching trends that are above the 200, possibly in an uptrend 4 to 6 weeks before earnings. That's a sequence. That sequence is going to lead to a certain number of stocks on a list, right? But if the list is net gapped up, that's not how you want to be looking for opportunities. But to answer your question, how would I do that? Shorten the time frame. It won't be on the daily time frame. Maybe it's an hourly time frame. Maybe it's a 30-minute time frame. I like the hourly, and I'll have to wait for a setup on a shorter term time frame. That's it. Do we know if it's going to pull back? We don't. We need a setup. That's really the answer. How do you get in? You find a setup, right? So that's really where a lot of traders struggle with earnings. They're either playing the earnings event, not a good idea. They're playing the gap after earnings, also not a good idea. What we can do instead, and by the way, gang, I have this complete process explained. You can go check it out for free right now over at countdowntrader.com. In fact, do this instead. This will get you right to it. Head on over to Countdown Trader. Here, I'll give you how to find it. So go to Google and search countdown trader 642. And what that's going to do is that's going to take you to about 3 or 4 different blog posts that are posted at that site, countdowntrader.com, and show you how I trade earnings. And so what you're going to find is there is a process where we can get prepared for this, right? Or if nothing else, 6 weeks before earnings, so roughly the beginning of the year, right? We ask ourselves, is net a stock that I'd like to buy? And maybe it's an oversold buy, like something on the 8th, January 8th, off this Darvis level, or again on the 17th. Those are setups, right? Those are setups that if above the 200, we're in the bullish hemisphere, we can buy off that automated support level. If you can focus on those kinds of setups, well, maybe you took profit on the 22nd and you thought, you know what, I'll take a half or 3/4 of my position off the table, and then I'll see what happens with the last half or the last quarter of my position. Hey, we could have gone to, quite frankly, we could have gone to 77 as easily as we went to 107, right? So we have to brace ourselves for either the expected move to the upside in our favor or the expected move to the downside. But if I've already taken a trade and I've already scaled out, and net was on my radar because 4 to 6 weeks before earnings, I was already looking at things that were a little bit more bullish than other stocks. Maybe it's just above the 200. Maybe it's at the Darvis. Whatever that criteria is, I'm just showing you mine. You can at least position yourself for a quick trade and then maybe take a shot with smaller position size for the earnings. That's how you do it. And I will say that is going to outperform from a risk perspective anything else. Anything else, right? Yeah, someone can go in and write premium and play the binary. That's going to be a coin flip. You either lose or you win big. That's not how I want to build my career. I want to build my career in that nice, steady, uptrending manner of finding high probability setups and just being a boring trader and following that sequence, right? And that's really what this is going to be about. So if you're saying, Rog, that's not my style, cool. I'm telling you exactly what I do to grow accounts, how folks in the Sector Secrets Mastery are growing accounts, not having home run wins. I'm tired of hearing about someone's 1 win or 2 wins. I want to know what you did that month. I want to share what I have done. That's exactly what we're going to do. Is the account growing? Anything else, gang, straight up, is garbage. Anything other than is the account growing is a waste of your time, right? I think you know that. I think we all know that in our minds, yeah? Okay, so next up is an important question. Do I have any bets on this game? A, I don't gamble, and B, Captain Jane, I'm not even going to be watching the game. I'm going to be looking at some charts. I'm going to be working on the webinar for Thursday. I'll tell you what, it finally dawned on me a few weeks back. I told Bot, other than F1, which I like to watch Sunday mornings when I'm doing my morning pre-week homework and I'm writing top tier outlook, I like to put the F1 race on. I'll usually mute it and I'll write. That's one of my favorite things to do during F1 season. And I was watching West Ham earlier, so I'll watch a little La Liga. But other than that, yeah, I know it sounds crazy. I wanted to quit football before Super Bowl Sunday because you know what? No one's writing me a check tomorrow if the 49ers win or if the Chiefs win. I'm not getting a ring. I'm not getting anything, but I will lose 4 hours of my life. Bot's already giving me grief. I just thought about the 12 to 16 hours that I've been spending during football season. I'm thinking, well, what else could I do with that? And so Bot's telling me I may not have to speak. Bot, I told you go Niners. I really don't care who wins, though. I don't. Neither one of my team. I hope for everyone it's a good game. I think there are compelling narratives on either side, right? I'm not watching it. I don't know what we're going to watch instead. I have no clue. We'll figure it out. Oh, I'm getting a speak to the hand from the bot, but I am gonna watch the commercials in the morning on YouTube. Jack, guys, thank you for your mentions. Thank you for teaching risk management. I've been reviewing it this weekend. Yes, one of the things that you're gonna get when you all get the trial. So many of you out there have already gotten the trial. Awesome. Thank you. please, 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 first thing you're going to do, watch the Holy Grail videos, read the Holy Grail notes, and then use the spreadsheet in the trading room. That's going to teach you how to position size. It's going to teach you how to exit. It's going to teach you stop loss, risk management, position sizing in a formulaic way that scales, right? I don't believe in small account, medium account, large account, Godzilla size account trading. As if we change our trading depending on our account size, we should change and understand risk. We should change and understand position size, right? Maybe some symbols are unaffordable. They're not at this stage in time something that our account can trade. It's kind of like going to the gym, right? I'm not going to be benching, squatting, curling massive weights, right? We work on form. That's exactly the way we work it in the mastery. It's a very simple process. So I would say once you've checked out the trial, and I'm sure you've all already gotten not only the webinar invite, please do check out the webinar, especially if you got the trial. It's gonna be a great primer for what you can expect over the next month. But yeah, if you're already in, Michelle asks, is that homework? Oh gosh, it's the most important thing that I could share with you, Michelle. It's the most important thing I could share with any member. Raj asked, do I look into market time cycles? I do not, no. I'll look at seasonal cycles sometimes, but here's the thing, gang. We have elections and a dovish pivot from the Federal Reserve. The rest of it's just, it doesn't really matter. Do I think those things are interesting? I do. Do I use them? I do not, my friend. So I really can't speak intelligently on them, nor should I speak on them at all, because it's not how I make decisions to enter or exit markets. And that's the only time that I ever should be giving advice or my opinion on anything. The simple answer is I don't use them. But please remember, when the Federal Reserve is readying for a dovish pivot, my gosh, that will eclipse everything. That's it. That is the macro. That is the seasonal. That is the cycle. All right, gang, I promise I'd shut up before the game. So enjoy the game, everybody. I hope you're with friends and family. Absolutely. Go whoever. Do the thing. Win the points. All right, gang. Be good to each other. I will talk with you all on tomorrow for Charts and Coffee. All right. Until then.